In 2014, a startup reported $14,000 in actual revenue. Investors had already put in nearly $1 billion. The founder told them she'd created, quote, the most important thing humanity has ever built. 1 million patient test results were later invalidated, and in 2022, she was sent to prison for defrauding investors. In 2016, Nikola Corporation unveiled their hydrogen-powered semi-truck to the world. Trevor Milton, the founder and CEO of Nikola, said 3 times, quote, "This is a real truck. This is not a pusher," end quote. The crowd cheered. Retail investors bought in. His personal stake in the company hit $7 billion. What investors didn't know? Engineers had pushed the truck to the top of a hill and filmed it rolling down, powered only by gravity. Milton ended up in prison for 4 years, and the company lost more than $27 billion in market value. In 2019, Elon Musk stood on stage and told the world Tesla would have 1 million robotaxis on the road within a year. In 2016, he said full self-driving was, quote, basically solved and 2 years away. A year later, in 2015, he called full self-driving, quote, a solved problem. For 19 consecutive years, Musk has been saying some version of this. Tesla's own internal documents, uncovered as part of a shareholder lawsuit, show engineers repeatedly told leadership the technology wasn't ready, while Musk was telling the public it was. Eventually, the SEC fined him $40 million for one tweet, but for every other broken promise, nothing ever happened. Milton and Holmes lost everything, even their freedom. But what about Musk and the other billionaire technocrats who do this every single day and are idolized and enriched by it? In 2015, Musk said self-driving Teslas would be a reality within 3 years. In 2020, he told investors full self-driving would be complete, quote, probably towards the end of this year. In 2025, Musk told investors millions of Teslas would be fully autonomous by the second half of, quote, next year. By February of 2026, Tesla was forced by the state of California to drop the term autopilot from all marketing and any reference to the feature being available. But this is a pattern of behavior that extends well beyond Tesla's full self-driving. He announced an affordable $25,000 Tesla model in 2006, but was quietly abandoned by 2025. Musk said the Cybertruck would hit production in late 2021. It didn't start production until 2023. In 2017, he said the next-gen Tesla Roadster would have a 2020 launch. Guess what? That model still isn't a reality in 2026. Hyperloop promised to connect cities in 30 minutes. It was discontinued in 2023 after a decade of fictitious progress. Musk said he was done selling Tesla stocks in August of 2022 after completing a sale of $8.5 billion of his own shares, only to sell $6.9 billion more in August, $3.9 billion more in November, and $3.6 billion more in December. Tesla's share price went on to lose 60% of its value. Only the funding secured tweet, where he claimed to have the backing of the Saudis to take Tesla private at $420 per share, actually generated any action from regulators. The SEC fined Musk $40 million because they alleged he knew the deal wouldn't happen, and it didn't. Investors subsequently lost $12 billion in the ensuing sell-off. The SEC fine amounted to a slap on the wrist for the soon-to-be trillionaire. Despite these hyperbolic, irrational, and demonstrably false statements, Tesla's market value has increased more than 2,000% since the SEC fined Musk for that now infamous tweet. Now he plans to take SpaceX public at a valuation of $1.75 trillion, despite booking less than $16 billion in revenue for all of 2025. What's crazy to me is the market watches this play out repeatedly and just kind of shrugs, continuing to buy what is now known as the Elon trade, despite the repeated failures, double dealing, stock manipulation, and general shitbaggery. But some people watched Musk's strategy pay off and decided to take it further, not just lying about products, lying about money. Over the course of 4 years, from 2019 to 2023, Microsoft invested $13 billion in OpenAI. Microsoft also operates a cloud computing product called Azure. Azure, conveniently for Microsoft, also represented approximately 55% of OpenAI's total operating expenditure. Through the first 3 quarters of 2025, OpenAI's cumulative Azure consumption reached approximately $12.43 billion, roughly 96% of Microsoft's total investment returned as guaranteed cloud revenue. But here's the catch. The initial $1 billion invested by Microsoft into OpenAI was split between cash and Azure credits. $500 million in capital, $500 million in Azure credits. Microsoft booked that $500 million in Azure credits provided in exchange for OpenAI equity as Azure Services revenue. OpenAI then books those credits as an operating expense, validating their burn rate to justify the next capital raise. In layman's terms, Microsoft and OpenAI have built a financial loop where invested dollars flow back as revenue, and current accounting standards can't distinguish it from organic market demand. And the cherry on top of this circular manipulation, the accountants are now getting in on the act. Microsoft is using an accounting treatment called the equity method to justify this to auditors and shareholders. The only problem? They don't qualify for that treatment because Microsoft has neither voting rights nor board control, which normally would disqualify it from using equity method accounting. Yet they're still booking most of OpenAI's losses as their own expense. In their January 2026 earnings report, Microsoft recorded a $10 billion gross gain from OpenAI's October recapitalization. This boosted Microsoft's earnings per share to $5.16, a 60% jump that doesn't reflect underlying business performance. Adjusted EPS would have only been about $4.14. And in case you don't want to do the math, that's an aggregated earnings gain of $7.8 billion. The compute is real. The invoices are real. But when Microsoft reports Azure revenue growth, there is no distinction between an enterprise customer paying for the service with cash and OpenAI paying with Microsoft's own investment dollars. And none of this is technically illegal.